Where exactly do I buy? Where do I place my stop loss? And when do I lock in my profits? A big reason why so many people struggle with crypto trading is the lack of a clear and effective trading strategy. In this video, I will be breaking down one of my favorite trading strategies from one of the best trading books out there, and I will show you guys how to perform these critical moments in a step-by-step manner. So guys, make sure to follow every single step in this video and you will walk away with a professional trading strategy. Sounds good? Let's get started. Step number one for this strategy is that we need to identify a clear either support or resistance level. And if you take a look at this chart right here, can you find any clear support or resistance? Well, as we can see, we do have a price area here that every time the price reached this area, we did see a reaction here towards the downside. This is an indication that we do have a resistance level here. So what we do is that we do want to draw our resistance level. And the best way to draw resistance levels, in my opinion, is actually to use the rectangle tool, which will be located right here if you are using TradingView. When you draw your resistance, you want to include as many touches as possible. So you want to draw your resistance level something like this. You can see in this case, we do include the resistance touch right here, the resistance touch right here, this one and this one. The second step for this trading strategy is that we want to see some indication that the support or resistance level, in this case the resistance level, is more likely to break. And what we want to see for this particular trading strategy when we have found a resistance level is that we want the price to print consecutive higher lows, right, coming in to the resistance. So as you can see, we have one low right here, we have a higher low right here, and here we have yet another higher low. These higher lows into resistance indicates that the buyers are getting more aggressive and confident that the resistance will eventually break. If you want to, you can go up here and use your trend line tool here to draw some sort of upward sloping support that indicates this factor, that we are seeing more and more aggressive buyers. When you have found your resistance as well as the higher lows into resistance, we are ready to talk about our entry point. And this might sound a little bit weird, but what we want to do for this trading strategy is that we actually want to enter the trade before we see the breakout. The reason for this is that if we manage to enter a trade before a strong breakout, we can catch really large and aggressive moves and lock in big profits. So it makes sense to enter somewhere in this area right here. And you may of course wonder, why couldn't we enter at, for example, this area right here? Well, the principle we're using here is that for every higher low into resistance, it makes the resistance more likely to break. But okay, so now you know you want to enter somewhere in this area, but you may of course wonder, where exactly do I enter? How do I get the precise signal that we want to enter the trade? Well, for this, you can actually use price action, for example, Japanese candlestick patterns, to get your precise entry. If we zoom in a bit here, you can see that this green candle together with this red one right here is actually a bullish engulfing pattern, and that is a bullish Japanese candlestick pattern that indicates a potential reversal to the upside. So you can use a bullish candlestick pattern such as the engulfing pattern or a hammer or something similar to get your precise entry for your trade. So right here we open up our long position and we enter our trade at the candle close of this bullish engulfing pattern. There are a few ways to set your stop loss for this pattern. I prefer to set my stop loss just below the low point, the highest low preceding the breakout. So as you can see, I set my stop loss below this point right here, and I also allow for some wiggle room below that point. The reasoning behind this stop loss is that if the price gets rejected at the resistance once again and falls below our stop loss point right here, then this breakout is much more likely to not happen. But what about your profit target? Well, there are many ways to set your profit for this trading strategy. But because this is a breakout trade where we actually enter at the preceding base before the breakout, What I'm usually looking out for here is a larger move towards the upside. So a risk to reward ratio of 3 or more, which basically means that our profit right here should be at least 3 times as large as what we lose if we actually lose the trade. So as you can see, this is how the chart would look like in real time just after making our entry. And in this case, the breakout played out beautifully and we locked in some quick profits from this breakout. So the strategy you learned today is amazing. However, one downside is that it can take a while to find these perfect setups. So if you guys want to learn a trading strategy that happens all the time in the markets, I highly recommend you guys to watch this trading strategy next.